This is Scott Becker with the Becker Private Equity and Business Podcast. I'm thrilled today to be speaking to one of our most listened to guests of all time. We're talking today to Rick Kes. Rick's a partner at RSM, brilliant consultant, brilliant person. We're going to talk today about the private equity market 2024. And I'll use as a tee-off point one of the articles I saw this morning in Bloomberg, which basically said 2024 is starting off as slow as 2023. Rick, let me ask you to take a moment. What do you see? What's the reality of what you're seeing out there in the mid-market? Is that a true statement from Bloomberg, or is there more room for optimism than Bloomberg's article stated this morning?
Yeah, Scott, I think generally speaking, my disposition in life is optimistic on many things, maybe overly optimistic. But I think in 2024, I guess I'm optimistic about a couple things. One being kind of the interest rate environment and kind of the tea leaves that we were reading there is that perhaps there could be some reductions in interest rates maybe in the, May or June or July timeframe. Not all that speculation, of course, but again, setting the stage that I'm an optimist, I guess I'm speculating on the optimistic side that, in fact, rates will go down and will kind of change the mindset of investors that use debt to finance, a big portion of their transactions, which often the middle market private equity firms are doing. So I guess I still have a flavor of optimism in 2024 that we'll see some tick up in the deal market, deal activity value. And I think, interest rates being a big part of that, on the other side being, a realist as well, it is an election year, maybe an odd election year in that, we have, an odd set of circumstances behind a couple of the parties that are running. And, we guess we'll see how that impacts the sentiment of investors. But my hope is that some of that gets kind of pushed to the sideline, the economics overcome many of those factors. And if interest rates go down, inflation stays steady, jobs do continue to increase, hopefully that kind of those economic factors continue to propel deal activity back to what maybe we would be hoping for versus, another year like 2023.
Well, certainly President Biden would be thrilled to see the interest rates go down a little bit and sort of business activity stay solid and to see inflation stay relatively softer than it's been the last couple of years. I think if you looked at this from the incumbent perspective, low unemployment together with not rampant inflation and a little bit lower rates would be very favorable. And of course, Powell's very independent of the president, but that would be the prognosis that probably the private equity markets would want to see: lower inflation, lower interest rates, and expanded deal flow and exits and entrants, and also the president would want to see.
Obviously, I think going into the election and, whoever's sitting in the incumbent seat, is going to like to hear, positive news, right? And that I think is kind of what you're saying. And I would agree with those sentiments. And the fact that, Powell is independent of politics, I think is, obviously a balance in how, the U.S., economy works. And, I think that's all well and good. So, hopefully, I guess from our client's perspective, absent the politics behind it, those things continue to go in the direction that I guess we're hoping that they will, that interest rates will go down because we're seeing inflation kind of curtail to a point where it isn't becoming, a problem like it was maybe 18 months ago. And they're able to reduce rates a bit and get us back into a point where, people are willing to, accept terms of loans that will allow them to finance the deals that they're hoping to do.
It seems like the big law firms, the big consulting and accounting firms, and I know you can't speak about RSM itself, we don't expect you to, did okay this past year, even with a tighter deal environment. The investment bankers themselves had a tougher year, but following in the footsteps of 2022, which was a pretty good year. And what do you see sort of in terms of like the climate for professional services, middle market bankers, and so forth this coming year, see some pickup in 2023, but not a home run year is, I guess, what we'd expect.
Yeah, and so much of, all that is a little bit, depends on the industry that those professional service providers participate in, and sometimes even the geography, depending on where you are, things are still happening. Maybe the big deals aren't happening, but other activities like joint ventures or other acquisitions or other smaller things are happening that maybe aren't, getting to the point where, PitchBook is picking up data on transactions, but, there's still things that need to happen, from a legal or accounting or tax advice perspective. So I do think that, to your point, generally speaking, when I talk to my colleagues at other firms, is kind of coalescing, the entire professional services perspective from, the accounting, tax, consulting firms. I do think because of those factors, because we're not, dependent on it only being, deals that drive our business, then I think we're able to kind of, I'd say weather the storm on, a lower deal volume activity year than perhaps someone that's like only, reliant on actually closing a deal, like perhaps some of the investment bankers out there.
So I think that's a great perspective. We'll be excited this year to talk to you throughout the year on interest rates, on the deficit, on the deal environment, and more. Rick, it's always fantastic to get to visit with you. Thank you for joining us today on the Becker Private Equity and Business Podcast. And thank you to Chanel Bunger, our wonderful producer, for producing with us today, too. Thank you both.
Thank you.